University, and it's time for Bulls versus Bears, the weekly Forex forecast. And we're going to get started. I'm going to be using my market heat map to analyze the market for this upcoming week, for the week beginning first week of February. We're in the last throes of it's actually going to start January 31st, right? We look at the calendar here. Yep, we have one more day, but it's going to be February for Tuesday. So let's go ahead and take a look at the market. I'm going to use my market heat map. This is an arrangement of currency pairs by percent. The Google Play Store, the App Store, download it. And it's a 30-day free trial, and you can try free for 30 days, and then after that, it's just $19.95 a month. I wouldn't go trading without it, but let's go. I'm going to log in, and let's do some analysis. So there's a number of tools here. There's multiple heat maps for various asset classes. There's also a bunch of trader tools, Forex TV, quotes, charts, economic calendar, tutorials and videos. There's also bonuses, $5,000 scholarships and VIP mentorship sessions and private coaching, and also my partner brokers and things like that. Okay, so let's get right to it. Trader tools. I want to start with the economic calendar. Before I get started with any type of trading, the first thing you want to look at is the economic calendar. And everybody's like, Greg, economics boring. I don't like economics. And the thing about it is that a lot of times what happens is we get so caught up in the technicals that we forget about what's driving the technicals. And what we have driving the technicals is the fundamentals, these major announcements that come up. I only look at the high impact ones. Those we get the most bang for our buck. Think of the news as a big rock that you throw into a pond of water or a lake, and it creates these ripples. And these ripples go throughout the entire market and create all kinds of activity that's tradable. Okay, so I want to be able to point some of the major announcements that I'm looking at right now. I have a chat box here, and I'm going to say hello out there, and hopefully maybe you can hear me. I'm using the software again. It didn't work so well the other time, so I'm not sure if I'm actually streaming. And I'm looking at. Let me go ahead and refresh the Forex Cash Machine. I'm broadcasting into the Forex Cash Machine group. And I am. There I am. I'm live. Okay. Rafi, I see you, brother. Thanks for giving me the thumbs up and let me know that that you're out there. Let me know in the comment section if you want me to analyze something in particular. Okay. Thanks for the thumbs up. Appreciate it. And okay, let's get going. We got the Monday, we have the RBA interest rate decision, RBA rate announcement. Widely expected that they're going to keep rates unchanged at 0.1%. Hey, I can see you in the chat too, man. Hold on. Hey, Rafi, how you doing, buddy? Shout out. Whoop, whoop. And so that's going to be a really important announcement. Aussie dollar will be on fire. Either it's going to break up really big or going to break down, right? So the thing about it is we don't want to trade the Canadian dollar during this thing, right? Unless we're trading Aussie CAD. The party is going to be an Aussie dollar. It tells you right in the calendar. The calendar tells you where the party is, okay? Because you might go to some currency where it's flat beer and no chips, and then the police are coming, right? So you want to be at a party which is going to have a lot of action, a lot of activity. So Aussie dollars are first party that's going to happen. That's going to be on the 22:30. That puts it at 10:30 p.m. Eastern time. And you have to convert it to your own time for your local time. Tuesday, February 1st, we have some mixed data. We have the euro with the market manufacturing PMI. PMI stands for Purchasing Managers Index. Previous number was 60.5. We're not given much of a forecast. But that's going to impact the euro. It's out of Germany, but Germany is one of the largest economies in the Eurozone. So what happens in Germany will probably affect the euro dramatically. Okay. There's also ECB lending, bank lending survey. And it's a high impact item. It comes out at 4 a.m. Eastern time. So all this stuff is in Europe is happening around 4 a.m. You maybe sleep, you might miss it. But if you are up and if you're a night owl or morning, really early morning person, you'll probably see some pretty good activity in the euro pair. And then following that 4:30, back-to-back championships, you're going to have the British pound with the UK market manufacturing PMI too. And that's a survey as well. Widely expected 56.9, no forecasts given. I'm not really particularly paying attention to the number. I just want to be looking at somewhere maybe a few hours before to see what kind of setups are, because these big announcements, they're going to drive price. And, volatility can be your friend. It also can be a hurricane, which can like tear up our sails and blow away our kites. So be careful. Always trade off a stop. Now, 8:30 a.m. is for us, morning people, maybe in the North America. We'll be waking up for some Canadian news. We have GDP, gross domestic product. MOM is not your mom. It's your mom. No, it's not your mom. It's month on month. Okay. And 0.8% is a previous number. With all the lockdowns and things going on there, it's really impacted their GDP. A lot of people leaving Canada because of the different strict COVID restrictions there. Also, truckers and things are protesting, huge protests going on in Canada. Truckers are having convoys where they're just, blocking traffic and protesting the COVID strict rules there. Okay. So anyway, the party will be in the Canadian dollar at 8:30, and you look at pairs like CAD Yen, CAD Swiss, and dollar CAD. Again, we're not determining direction from this. All we know that during this time, we don't want to be trading the euro unless we're trading euro CAD. The party was in euro earlier in the day on Tuesday, February 1st. He said, well, Greg, how do you know this? Because the calendar tells you exactly what to do. And maybe people haven't told you how to use a calendar. They tell you avoid trading news. But I tell you what, there are some big boys that are driving price into these announcements, either a couple of hours before or even a day before. They'll see all kinds of setups. Now, with our pip and run Forex scalping system, we actually have predictive indicators which can actually show us what these guys are doing, just like we forecasted the rally in dollar CAD after the Bank of Canada. And I tried to broadcast that, but I was using the software and it's brand new. And so I can't get my camera to work on it, but I know they put a lot of advertisement too. Managed fluke and access anyway. Moving right along. Now at 10 o'clock, now in the US, there's two news cycles. There's an 8:30 news cycle and a 10 o'clock news cycle. Okay. News that comes out at 8:30 and news that comes out at 10 o'clock. If you're an old Traders Trading Places movie with Dan Aykroyd and Eddie Murphy, I would strongly, it's funny as all get up. It was filmed back in the 80s. And they're all trying to, find out the crop report's going to come out, about frozen concentrated orange juice. So, and they open up the envelope and all the traders stop trading. And then, they announce it and then they start buying and selling, which is what's happening at 8:30 and 10. The market will die down. The news will come out and then boom, you'll have this move, right? And it'd be cool to be in that kind of market before all the activity happens, right? And so we're pretty good at forecasting what's going to happen. Almost like we have a phone line down to the floor almost. A little unfair advantage. Okay, so 10 o'clock, we're going to have ISM manufacturing PMI. Previous number is 58.7. Look for a decrease to 58.3. Again, I'm not concerned with the numbers. Just know that there's going to be a party in the US dollar. But more particularly, you want to look at the euro. Now, this is counterintuitive. The euro is the anti-dollar, okay? So the euro being the anti-dollar, whatever is going to be good for the dollar is going to be bad for the euro. Anything's going to be bad for the euro is going to be good for the dollar, okay? So what gives us the most bang for the buck, you can trade dollar Swiss, you can trade dollar CAD, but since the euro has the title, the anti-dollar, then why not trade the euro? It's $10 a pip or $1 a pip. It's highly liquid. It's one of the most liquid trading instruments on the planet in the universe. Unless you're trading dilithium crystals or something. But the euro is what you want to trade. Be trading at 10 a.m. Eastern time or somewhere around there. Okay. Now at 16:45 puts us around 4:45. That's kind of a dangerous time to trade. There's New Zealand employment change, and what happens at around 5 p.m. And that's like 15 minutes before 5 p.m. 1700 is 5 p.m. During that time, the liquidity dries up. There's no banking center that's open. U.S. is closed. Europe is closed. Asia is closed. So what happens, the brokers will widen out the spreads, and that's when they pay their interest or swap, or they collect swap. So they're like doing their books and doing all kinds of stuff. And so those spreads will get really wide during that time. So you might say, I'm going to trade this New Zealand always comes out with in fact, it's the first market that opens. It's Wellington, New Zealand, that opens up at a little after 5, like 5:01. Boom, they're open. But that's the only market that's open. So there's going to be not a lot of players, and if there's not a lot of traders in the market, well, there's not a lot of liquidity, and so there's big gaps in the market. So you might see spreads of 20, 30, 40 pips during that time, and then maybe an hour later or 2 hours later, those spreads will narrow. But I always avoid trading between 4 and like 5:30 or 6. A 2-hour window, I'd leave that alone. So I would leave anything alone here. But Aussie, the Aussie dollar has the RBA Governor Lowe's speech is coming out at 8:30 p.m. Eastern time, and that means that the Australian dollar will be in play. There might be a play in the New Zealand dollar if there's some type of whatever the reaction is. I talk about it in my masterclass, 4 Pillars to 6 Figures, about action and reaction. And you might want to sign up for that free masterclass. You go to www.elitetradersuniversity.com and check out the free masterclass. It'll talk to you about how the pip and run system looks at action and reaction like a rubber band stretching out. So if New Zealand dollar stretches in one direction, we might be able to scalp it on the way back or wait for a continuation of the trend. Okay. Thursday, February 3rd, my mom's birthday. Happy birthday, Mom. Okay, we're going to look at this is Super Thursday. Look at this, Super Thursday. The reason why they call it Super Thursday is because they have so many UK announcements in, during that day. Super Thursday. We have the market services PMI at 4:30, then the Bank of England interest rate decision at 7 a.m., followed by the asset purchase facility at 7 a.m., the monetary policy summary at 7 a.m., then the Bank of England minutes, and so it's all UK. So this is the big party in Thursday, February 3rd. Mark your calendars. It's going to be the pound, guys. And, there's going to be all kinds of bullishness or bearishness going on, extremes, because of central bank announcements, interest rate announcements, whether they raise or lower rates or do nothing, will create huge ripples. It's like a giant rock. It's like an asteroid hitting the ocean, and it creates these big waves. Mark my words that when we maybe do next week's session, I'll show you a chart of the Bank of England, and we might see maybe even 150 pip move on the pound dollar. So you don't want to be trading the Canadian. Oh, I want to trade the Canadian dollar because it's my favorite. Forget about it, because the party is in the pound. So if you choose a currency other than what's listed here, you are wasting your time. You're going to be in a silly currency pair that's not moving because it's your favorite or because you saw someone else or someone say. But if they're telling you what is going to be on for that day, then that's what you need to be looking at, okay? Or you'll be stuck in a trade with a bunch of dojis in it and wasting your time going, wow, look at that move in the pound. I should listen to Greg. But it's okay. You didn't know, but now you know. Okay. Once you know, then, but fool me once, shame on you. Fool me twice, shame on the other guy. I don't know how that works. Anyway, moving right on, right after that, 7:45, 45 minutes later, we're going to have the ECB rate decision. This is the European Central Bank. That's another big asteroid hitting the water, creating a big tsunami tidal wave of price action. We're going to have the ECB rate decision. ECB, that's going to be the policy statement too. And that's going to come at 7:45. So 7:45 and 8, when they start talking and running their mouth about the euro, that thing is going to be in play. So it'll be very interesting to see. With inflation around the world, the way central banks fight inflation is by raising rates or increasing the cost of borrowing. This will affect everything to try to slow down these high prices, but it could also hurt the economy if they raise rates too fast. But they're, between a little rock and the hard place, right? If they raise rates, then people can't afford to, the debt, and the government can't borrow debt cheaply either. Okay, we're up like $21 trillion. So all of a sudden now they got to pay more interest. And also it could crush the housing market, where before you're getting a loan for 3.78 or 3.4, and now you're looking at 5 and 6% interest rate on a house that's already overpriced anyway, and no one's going to buy, and that's going to probably lead to a housing bubble collapse. So the Fed is trying, and the central banks have to wrestle. If we let prices keep going higher, or do we, we crash the housing market? Okay, next thing I want to look at is the RBA monetary policy statement. They have it's kind of, other banks usually put them together, but they're actually going to release their statement. That's going to be at 7:30 p.m. Okay, so basically you're going to have like 3 central banks on Thursday. So it's going to be a really rocking and rolling Thursday, right? Don't you hate that when you're in the market, nothing happens, right? Very rarely do you see a central bank. I don't think ever in my 25-year career I see a central bank say something and nothing dramatic happens, right? Maybe it didn't go the way people thought it was. They hiked rates and the currency went down. Had that happen to me, I think I was Greenspan back in the day, right? Greenspan said one thing, he's raised rates and the dollar dropped, and I was long dollar, and it really sucked. Okay, so now I don't even pay attention to what they say. I just know when they say it and at what time to look at the market and look at my predictive function indicators to actually determine what direction I'm going to get in, right? So that's helpful. Friday, February 4th, thank God it's Friday. We'll have a UK market construction PMI, 54.3. No forecasts given here. But again, it's important until like at 4:30 a.m. Eastern time when this announcement comes out. You'll be trading the pound. Average earnings year on year is yo. No, it's year on year, YOY. Okay, and that comes out as well. They have the forecast 4.7%. They look at an increase of 5.1%. Hey guys, we've got a lot of vacancies. People probably in the gig economy I'm not going to work for minimum wage when I can make more money being a YouTuber or something, right? So wages have to go up in order to attract people back to these jobs. So you might see those hourly earnings up, which is also a sign of inflation. Which sometimes you think, oh yeah, wages going up is good. For business people, paying people more money out of their own pocket is bad for the market. So the market and people are like two different things. Understand that. Just because stuff goes screwy in the stock market doesn't mean the average person doesn't own a stock, so it really doesn't affect them. In fact, stuff might get cheaper. They won't have to raise if raising prices is not causing their stocks to appreciate, so they can't make any more money, more revenue and all that other greedy stuff that has caused these asset bubbles. So if things collapse on the macro level, the little guy will probably actually catch a break this time, right? Okay, so average earnings, we're looking at that. And again, anytime you see USD, look at the euro first. Okay, that's just my little hint to you. And then, the mother of all announcements, non-farm payroll, NFP. NFP. That is the non-farm payroll. Like, who works in the farm anymore? I don't know anyone who works on a farm. Maybe a CBD farm or a marijuana farm. But anyway, non-farm payroll, all the jobs that don't include farms. And what we're looking at is how many jobs are created in the United States. And it's one of the most widely watched economic indicators. Why? Because if people have jobs and they make money, they take that money and they buy import cars and other goods and services. And about 70% of our economy is made up of sales and consumerism. So when we have more people working, and that means more money actually in the global economy. So that's why the American worker is, American jobs number is very important, whether you're an exporter in Taiwan, chip exporter in Taiwan, or you're an oil exporter in Dubai. They don't have any oil, Saudi Arabia. But, people are watching this number. Okay. Now, 238 is the headline number. 199 is with the previous number. If we come in dramatically above that, that's usually bullish for the stock market, bearish for the U.S. dollar. Okay. Good news in the U.S. is usually bad for the dollar, and bad news is good for the U.S. dollar. The U.S. dollar is it's the opposite. Any other country, it's the other way around, except for the U.S., Japan, and Switzerland, where good news makes their currency weaker. Yeah, and I said Japan, right? Okay. Average earnings, then you have Canadian change in employment coming out as well, Canadian dollar, and the North America will be in effect. You can trade the euro, you can trade dollar CAD. Looks very good for Friday. But if you made a killing on Thursday, you might want to take Friday off. Just a thought, right? Okay, so let's go into the technical picture. I don't see any questions in the chat box, and feel free wherever you are. If you're on YouTube, I have a centralized chat that connects all you guys together, which is really cool. This is one good thing with this software called Fluten. Okay, so I'm going to. The camera's not that good though. They don't have like a green screen or any special effects or stuff like that, but you can stream to everything. You have a chat box. That's really important. Okay, anyway, enough of that. Now, normally, if the market were alive right now, you could look at our heat map, arrangement of currency pairs by percentage change, and you would see these tiles actually move around and tell you, hey, the euro is trending higher and the dollar is trending. Well, look, it's already kind of set up for that too. There's no market activity, so there's nothing going on there. But we have like this Forex heat map. We also have all Forex pairs together in a giant. Those are the majors. But if you look at all Forex pairs, boom, you get the full effect. So I don't have to check 28 different charts. I can just look here and look, what's in the top spot? What's green? What's in the bottom spot? Which is red. Okay. And you can also go to the heat map to the front page. You go to the front page and scroll down. You get a sample. That's one of the 6 powerful heat maps we have. I gave you the Forex majors. You can check that out daily. And also get a 30-day free trial if you want to try that out. Okay. But let's go to some charts. And there are charts there, but I'm going to go ahead and go to the charts. And go to the charts. Let's see. Charts. Yeah. Okay. Okay. And get rid of all the lines, remove the drawings, and these Kramer dogs. Let's go look at the Forex. Yeah. Okay. And I want to start when I look at the Forex, I just like starting with the U.S. dollar index. U.S. dollar index is a basket of currency pairs versus the U.S. dollar. And so what I like to take a look at and see what's going on. What's going on? What's going on? What's going on? Okay. Marvin Gaye. Rest in peace. Okay. So we had this uptrend, higher swing highs, higher swing lows. We came down to support 95.57, and bam, look at this big breakout candle, this engulfing all the previous price action. Just massive, right? This is a weekly chart, and clearly trading above 20 period moving out, 26 period moving average, dropped down to a daily. Now we did. I think I had that that drawn from like a couple of weeks ago. We had a triangle, we resolved it, and then boom, 1 day, 2 day, 3 days of price movement. But we're topping out with a doji, the lowly doji. Doji is a market pause kind of candle. It kind of like signals like, hey, it's indecision. It's a tie. Bulls and Bears had a fight and they ended in a tie. This was the high of the day, 97.42, low of the day, 97.05, and we're in the middle. I look at it like a cross, like a cross in the hill, and it goes above the cross, it goes to heaven, it goes below the cross, price is going to hell, right? So we've got this. Now, this also could be part of a bearish pattern called an evening star. If we get a break below 97.04, it could look bearish. Now, remember, we have all these central bank announcements, so it'll be very interesting that maybe we're at the top of we broke above the range. This could be some type of bull trap to trap the bulls, and then we could snap back below. Look at 96.92 on the dollar index to see if that is in fact what's going on, because it did break with continuation with another bullish candle. It kind of like took it broke out, and the next day indecision. So we really want to see what happens. We might get another doji for Monday, and Tuesday may come below, and then that will give us kind of the heads up that those central bank announcements could be bullish for those currencies that we mentioned earlier. Okay, we can drop down to a 4-hour chart too, and you can see we're kind of curving over, cresting maybe. But again, we can draw a trend line, and we have an outsized wick there. I usually ignore those, and we just draw a trend line. We can look, hey, if we just break the lows, 97.04. Now, remember, the euro is the anti-dollar, so if the dollar is dropping, the euro is popping, right? So let's take a look. We have Aussie dollar. That's going to be the rate announcement coming out of Australia. So we're going to look at the Aussie dollar as one of the best pairs to trade. And you can see that we've been in this downtrend into a kind of demand zone. This demand zone goes way back, and we can, come on, baby. Can we shrink it down? Okay. There we go. We can shrink it down to this area here. And we just got below that area. And again, this broke these lows that we had. We had some lows down in the 60, 69, 92 area. Somewhere in here, we broke that low, 69, 92. We broke it. No continuation or follow through. So the bears kind of like climax. They're like, oh, this is it. Oh, we're tired. Okay. So you want to do is this. This is what I would do. I would draw a trend line across the top like that, and look for price to break above that, snap back into. This is a demand zone. Price has a memory. This was an old level back from December 3rd, 2021. We returned back to this area, and so we might see an upward move. So bulls versus bears. I am cautiously bullish. What would make me not be bullish if we crack below the old low, 69, 67. Was a low that came in on January 28th. And so we have a positive rally in the U.S. stock market. The Aussie dollar has a positive correlation with the U.S. stock market. That means when the stock market was going down, guess what? The Aussie was going down, right? So if the stock market is heading up, it had a positive Friday, and so it arrested the drop, and so we might see a continuation. It might move sideways for Monday. Tuesday is turnaround. Tuesday is, if you ever went to our workshop, Market Timing, where we talk about Mondays being counter trend rallies on Monday, and then the trend for the week happens on Tuesday. So watch that, the break above that, and then we can see a move higher. Okay. But the British pound was the next thing that we had some major news on. Take a look at that. Again, I'm only look at the pairs that were Let me move that. Looking at pairs that that had some news. And move this line. This yellow line is good. I'm going to keep that one. Oh, I want to keep that one. Hello. Okay, well, I get another one. I'll make another one. Okay. So we're on the other side of trend, and now we have another trend line down the 4-hour chart, right? And usually it's like they say 3 rallies to a top. Well, guess what? There's 3 rallies to a bottom. 1, 2, 3. But I wouldn't just buy this crazily. I would look at, we've got some old support here, and then we can actually take a Fibonacci, do a Drake from the bottom to the top, and now we're here. And we can see that we're sitting right spot on the 618 Fibonacci. This is like a holy grail number, kind of like, the Fibonacci's are, you can look at the way galaxies are formed, the way the human body is measured from the eyes to the nose, to the mouth, the ratio and measurements come up to this magic number, or the fingerprint of God, 618. So we find that there's lots of stuff on the internet about that, but we're sitting right on this growth number. And so if we get a break above, say, 34.28, we could see a move to the hey, there you go. I can't remember your name, but how you doing? Okay. So we can see a break to the north side, right? Oh, you're on YouTube. How you doing? In the vlog? Okay. I don't know. I didn't see your name, but nice to see you. Thanks for coming on, man. So we can look for a break. Now, this is going to be really good. If you guys are some crypto people, if you want a key here on crypto, keep an eye on the U.S. dollar index, okay? U.S. dollar index is topping out, and I'll talk about that later. But the pound is in play. If we get a break, we're sitting on this level of support. We may go sideways for a couple of, maybe up until Tuesday, Wednesday. As we get closer to the Bank of England announcement on Thursday, February 3rd, we could see a tremendous break, right? And it could break south too, but looking at the U.S. dollar, we would look for a break above these old highs of 34.31 for a move higher, right? ECB rate announcement, EURUSD. Got that coming up, and boy, it did drop down to some key level of support. Just hit that support, just bam, hit it, baby. Right? We had a trend line break. It rose up a little bit higher, and then we just dropped, this drop, right? So we've dropped below, and I'm going to move this line up here because really that was our old level of support. We blew through that, right? And, it didn't, there's no continuation. Price is moving sideways like it's basing, trying to maybe mount some type of a rebound. We may go down a little bit lower, but I'm looking for maybe on Tuesday, not Monday, not Sunday, but like Tuesday. Look for price to rebound from this area, all right? Maybe we come up to 112. We're currently trading at the 1.1147. Maybe look for a move. And what we can do is take a fib from the top to the bottom, play that Drake song backwards from the top to the bottom, and now we're here. That's after maybe you get you lose your record contract and you get arrested for drugs or something. I don't know. From the top to the bottom, and now we're here. 112.60 would take us to the 38% retracement. It would be like a minimum target to the upside, but I think we might even go even higher, right? But conservatively, again, I wouldn't take any trade till we got confirmation with some type of a trend line break. Daily chart, looked like really overstretched, and then we got that doji. Remember, we saw the lowly doji, right? So basically, price came down strong, but this is like a harami. We have the mama with the baby in the front, and this is a bullish reversal pattern. Again, if we break above the top of the doji comes in about 111.74 or so. So like 111.80 or so, a break above that could start the fireworks. Again, I wouldn't look for it. I know people like go, Greg, lower swing highs, lower swing lows. Structure seems going to go lower. No, that's all. That's all I'm going to say on that one. No. Okay. Um, and see. So we looked at that. Oh, Canadian dollar. Look at the Canadian dollar. We can look at dollar CAD. We can look at CAD Swiss. Okay. So this is. This is. Oh, look at that. Woo! 22,446 paper account. Nice. Can't close it out though. Yeah. Why? Because I got we had a bombing pattern, we had news, and I said, look, we're gonna all of our guys that were in the room, they played either pound cat or Aussie cat. Aussie cat was good too. I think AUD. I would look AUDCAD. Yeah, there was some. Yeah, see, it broke support 89.76. I didn't trade that, but I saw some bank research, which can be a little funky sometimes. What they give out to people, they were looking for a buy in this area here, but we broke. So, but dollar CAD was definitely, especially with the strength of the U.S. dollar, with Fed Powell saying that he could raise rates, USD CAD. And this is in line with what's going on with the with the U.S. dollar. However, we're coming up to an old high. We're also coming up to some Fibonacci, and this may be this party may not be over Monday, but Tuesday we could see maybe a possible pullback or turnaround. Right? Yeah, I could be wrong. They say even a broke clock is right twice, right? And even a blind squirrel can find a nut, right? But I just would look at something where if we had some type of bearish head and shoulders here, we could turn, right? If we continue to run back up to the old high, which is quite possible, but I would look for a break confirmation. I don't want to do anything unless I see the. Don't fire till they see the whites of their eyes. That's what the old revolutionary, American revolutionary troops. They ran out. They didn't have enough bullets. The British were coming, and they said, "Look, don't shoot till you see the white of their eyes. In order for you to see the whites of someone's eyes, they gotta be pretty darn close, right? It's like, hey, can I shoot now? No. Because if you miss, we run out of ammo. So make sure you. So that's what we said. Don't shoot till you see the white of their eye. So don't fire your wad until you see some type of confirmation, right? All right. Now, let me get to the good stuff. Let's talk about Bitcoin. People think Bitcoin is dead. It's over, man. But you've got to not. Just remember, it's BTC versus USD. Bitcoin and the US dollar can't go up at the same time. Right? Bitcoin is also like the anti-dollar. So what you want to do is, look at Bitcoin. Right? I'm going to go out to a daily. I'm going to go out to weekly. And what you got, kind of like a Harami pattern, a hammer, pseudo, right? Where we have a big bearish candle, but then we got all this support, whole bunch of demand. Crazy demand right there from. When prices go up and down like that, they're putting in the floor. Boom, boom, boom. They're building out a floor. So when it extends, price comes right down to where these candles hit repeatedly. Couldn't get lower than, say, 28,900 or so, 911. Boom, 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 boom. We give up. And then on the way down, and they retest. So now you've got a demand zone. And real simple, I have an advanced supply and demand zone course that we have. Shows you how to use trend lines and demand zones. And again, don't shoot till you see the whites of their eyes. Wait for this thing to break like 39, 113 or 39, 133, right? So again, come on now, Greg. The thing about it is that candle will wick up and down and you get smacked, right? So even here, so move that little circle over there. It's getting there to the line. It's getting there. But your risk reward, what you want to do. Again, there's no investment advice. This is what I would do. I would look. That's my long, my stop below that range, and I'd look for a full-on reversal, or at least up to there's a bunch of resistance in there, and there's also a lot of congestion in here. So it might not get that high. It may come up to like here, about 46.38, and stall out there, right? So once this thing starts moving, you can move your stop up, but you gotta give it a little bit of space to wiggle. The spreads are like super wide on Bitcoin, but as the dollar weakens, that's when if you plot. I don't think they'll work together, but if you compare it, if you overlaid it, you would see what I'm talking about. Use your dollar as a directional bias. So when the dollar is going up, hey, you need to be out of Bitcoin. When the dollar is heading down, you want to be in it. And they're like mirrors of each other, right? And then don't get caught with the S&P. Don't compare it in comparison. Sometimes it's correlated, sometimes it's not. Okay, so let me go back to the calendar. Let me make sure I covered everything. I think I did. We had the non-farm payroll, which is going, that's going to be coming out too. And if that number disappoints, we could see some trouble there. But again, I want to invite you to come over to my market heat map. Get a 30-day. That's 30 days. Get a month with my favorite tool. It's like the trader's Swiss Army knife, where you can try it for free. Use it, in your trading. Remember, green trading up, red trading down, gray stay away. It will shorten your analytical time. And there's a lot of other bonuses and things in there too. There's an 81 video course called the Forex Foundations course that's in there too. And it's you can even try that for 30 days. I don't care. And if you don't know anything about Forex trading, people go, well, Greg, what do you have? I'm like, look, you have $19.99. Do you have 30 days to watch 81 videos? Or you are $19.99, or you can cancel any time too. Like, I don't care. But there's a free Forex Foundation course there. And there you go. Take the course now, and lots of trading materials. I'll take you to my website, and it's more 4 courses. It's like freshman introduction to the currency crosses and candlestick charting and trading with stops and limits and trade management, trading with news. I mean, just everything you need to know about trading is right here, and it's in the Elite Traders University course, brought to you by my market heat map. All right. So anyway, that's it for me. Thank you so much for watching. Thanks, Rafi and Mr. Umfku. All right. Thank you so much. Peace and pips. See you later. Bye.